Let's take a look at the preview of the Seoul markets with June.
Good morning, Kari. Korean markets are pointing to another strong open this morning on the Kospi, especially Samsung Electronics poised for a almost 7% gain at the open after Samsung Electronics says that it will buy back 2.2 trillion won, about $2 billion worth of its shares starting today. It says that it is in an effort to stabilize its stock price. The stock price is down almost 20% compared to the same time last year. The buyback will be running through February 26th of next year, and Samsung Electronics says that it will be holding the shares for at least 6 months after the buyback is completed. Today, I'll also be watching the other Samsung Group names after Hanwha Group will be taking over 4 Samsung Group affiliates, more than a 2 trillion won M&A deal announced yesterday. Again, we did see very different reactions to this deal, with Samsung TechWin closing limit down yesterday and Hanwha Group's shares trading higher yesterday, especially Samsung Electronics and Samsung SDI. Samsung Electromechanics rallied yesterday, so I'll be watching if they continue this trend today as well. Also, I'll be watching Hyundai Group shares. We're seeing some news with its financial arm, Hyundai Card. More than 1,300 Hyundai Card users were double charged through a financial transaction error, and this transaction error has cost users about 1.5 billion won. The FSC says that they have started an investigation into this incident. Bernie, back to you.
Okay, let's dig into that Samsung story there, because this is a company which has an enormous amount of cash and sending a signal to the market they're willing to do something because they can't necessarily get people to sprint for their products in this environment right now. Roger Kay, president and founder of Endpoint Technologies Associates, joins us online from Boston, Massachusetts. Roger, good evening to you. I guess it's symbolic, isn't it? I mean, showing that they are sensitive to what shareholders are asking for. It's a new environment right now. The Chinese competition is hitting them perhaps more today on the low end. What do you think of this share buyback? Is it the right move at the right time?
Yeah, Bernie, well, it's probably more than symbolic, but I feel like in this case that Samsung is imitating the American companies in how they're managing large cash balances. You have a lot of U.S. tech companies with a lot of money who had thought of themselves as growth companies, but then finding that they weren't growing anymore, but they were still making lots of money. And then their shareholders got a little upset about that and said, isn't there anything you can do to increase value for us since you're making lots of money? Can we share? And at that point, the companies say, fine, we can pay out some of this in either dividends or share buybacks. I should say that, share buybacks are kind of a sleight of hand move in some sense, because really there's no change in the operations of the company at all. It's just sort of a financial maneuver that reduces the number of shares and therefore increases the earnings per share and makes it appear as if their earnings are somehow better. But the actual earnings themselves are exactly the same.
Mm-hmm. Roger, the company is their cash hoard has jumped 5-fold over the past 3 years. I mean, we're talking about 53 trillion won, $50 billion US. That's a lot of money. Now, for a company that needs new pathways ahead, I mean, if another Dr. Dre and a Beats came along, I mean, should they be thinking along those lines?
Right. So there you go. In the U.S., you've got companies, Apple is a good example, a rival for Samsung, and maybe one of the reasons why Samsung's mobile growth has been attenuated. And there they are, and they're also doing share buybacks, and they're also looking at acquisitions and thinking of ways to actually expand their top line. So for Samsung, the real story is, okay, shed some of those businesses that are not core, turn that into cash, and now start looking at investing in operations for the future where you can see some future revenue growth, because I think that's what the shareholders would ultimately like to see. There's nothing wrong with getting a bit of cash back in the form of dividends or getting a share price kick from some buybacks. But what you really want to see your investment doing is investing for the future and getting into businesses that are going to yield money down the road.
Right. Roger, I heard that there is a family issue that comes into play when talking about Samsung. And as we know, the patriarch of the Samsung Group, Lee Kun-hee, was hospitalized with a heart attack or a stroke or something, and is not completely recovered. I don't know if he's still in hospital, but he was for a long, long time. And somebody expressed concern to me that maybe the company doesn't want to see a huge spike. Doesn't want to throw a lot of money into dividend payouts or spike the price of the stock because of inheritance tax issues, because it is a very, very huge empire.
Right. So I think there we're talking about something that's rather unique. So we don't have a company in the United States, I mean, Apple even notwithstanding, that's large enough to represent a substantial proportion of GDP, and which happens to also be a family dynasty. So that's rather a unique situation. That's Korean alone. And in terms of the local tax laws and how that might go, I would say something like this. They need to keep their ship pretty stable going through the family transitionary period. The younger man may be able to take the reins, but it's likely he'll have to operate a somewhat lesser empire once all of that's done.
Roger, thank you so much for your time. Okay, happy Thanksgiving to you. Stay with us in Squawk as we bring you the opening numbers in Seoul and Tokyo. We'll be right back with the next hour 2 of Squawk.